Hello and welcome to Martyn Lucas Investor. My name is Sensei and we are here today for the morning forecast show. We're live every single morning. Today's breaking news is new tariffs, possible recession, bull market over. Every morning we're live to see if it's going to be a thundery day in the market. The market forecast, is it going to be a down day with significant rainfall, or is it going to be a sideways moving day where not much is happening but not always the worst thing? Or is it going to be one of those days we make a lot of money? Well, we will find out, because we've got some breaking news here today. We've got massive news here today. We've got the tariff chaos beginning once again. We've got markets in pretty much quite a big free fall right now. We've got the S&P 500, not the worst free fall we've seen, not like what was it called? Liberation Day. We are down nearly 8% now on the S&P 500, down 0.85%. On the S&P 500. If we go to the Nasdaq as well, that's not holding up too well either, down 0.9%. You can see it's quite a significant downturn. I think today will be the fourth day of losses. Let me have a look. Not for the Nasdaq. Yeah, we've had quite a few days of since those highs. Today and yesterday have been quite bad. I mean, just in the last 2 days, we're down 2.7% from the highs of the aftermarket as well. We've got gold not really reacting too much, up slightly. So the markets are on edge. You can see the VIX is up, depending on which one you look at, between 6 and 14%, bouncing off those lows. Volatility is back. So bounce if you want a chart analysis. It's not financial advice, but yes, you can do a $4.99 super chat just here and we can do that for you. Bounce back. I've just seen your question. So big day. We need to see what's going to happen. Is there recession? Is the odds of recession going up? Well, to break the news, it sort of is going up. Can this continue? It certainly can. Is this a buying opportunity? Well, it depends on your time horizon. I'm not here to give financial advice. I'm here to cover the news and give you my thoughts. But let's get straight into it. Tariff day has arrived. What? The markets didn't price in. We knew August the 1st was going to be tariff day, but there's another deadline, 7th of August as well, but there's a few things the market did not price in. If you are live here with us, or if you're watching later, please do hit the like button, subscribe if you haven't done so already. Whatever the day is, whether it's up, down, sideways, we are family, we connect, we go through it together. So the US economy is navigating a complex cross current of strong corporate earnings, escalating tariffs, and rising recession fears. We saw really strong earnings. Meta, Microsoft, best earnings, Apple earnings, brilliant, good earnings across the board. However, the S&P 500 is sort of pricing that in with its PE ratio. So that's good. Earnings are good. Tariffs are bad. Now there's rising recession fears coming into the mix. So, and also rate cuts don't even seem to be on the cards now in September. You have a look at the Fed Watch tool. It's now not pricing in any rate. Excuse me. So no rate cuts being priced in now in September either. So earnings are strong, but the market isn't convinced. For Q2 2025, the S&P 500 earnings rose 6 to 7% year over year, with nearly 80% of companies beating expectations. Revenue growth has been steady, 3 to 4%, driven largely by technology and a select large cap stocks. The Great 8 mega-cap tech firms continue to post double-digit profit growths, masking weaker performance across much of the index. Apple reported its best revenue growth, Microsoft posted double-digit revenue gains, Visa and other large-cap financials also delivered strong top-line growth. Yet, beneath the surface, growth outside big tech is modest. Retail, manufacturing and consumer cycles are seeing low to mid-single-digit earnings increasing. So what you've got here is something like the S&P 500, which includes a lot of these companies that aren't in the tech industry, that are being outdated, that don't have the same impact or same revenue growths that a technology company would have or an AI company would have, that are bringing down the global look of the S&P 500. Oh, we've got a super chat.
At Bounceback 711 donated $5 through a super chat. In just at a loss how this coin is not bothered by all this. Please take a look at it. XDC. You guys are the best, hands down.
Bounce Back, thank you so much for your super chat. After the main event of the show, once we go through all of this, we'll definitely have a look at XDC. Thank you so much for your kind words as well. And you can clearly see that you look at the Nasdaq, you look at the S&P 500, completely outperforming the S&P 500 is the Nasdaq, but we don't get to hear about a lot of the bad earnings within the S&P 500. The top 10 obviously take precedent, but there is about 70% which isn't part of those big names. So why Q2 may be the high point? Analysts warn that the full impact of August the 1st tariffs will not show up until Q3 and Q4. This is the issue. These extended deadlines on the tariffs, and I've been saying it has multiple issues, that these tariffs, obviously, we're not going to get political, whether they're good or bad for the US economy or the balance sheet. It's bringing money in. Brilliant. However, they have broader impacts. It's not just as simple as we're going to charge companies, we're going to get rich as a country. I'm saying that I'm here in the UK. We're not getting rich as a country here. But it's not as simple as that, because tariffs have a major impact, whether it's on the Fed or on companies and consumers. So yes, the country's making a lot of money. However, the Fed's not going to cut rates because they have no idea when these tariffs are going to come into impact. What is the real impact it's going to have? They can't price it in. Why would they bring tariffs down if the economy is doing? Why would they bring rates down if the economy is doing well? There's nothing pressing to bring rates down, and inflation's up. It doesn't make sense. That's why they haven't brought it down, and they can't really forecast the outlook of tariffs. Companies themselves, they don't know what these tariffs are going to be. They don't know how to price it in. They don't know if they need to lay off people. They don't know if they need to hire people. They don't know if they need to pass that cost on. Well, as soon as these tariffs are now in place without any further deadlines, that will all start being priced in. And that's what's happening today. We've got tariffs coming out. I don't expect Trump to give another 90-day pause. I think a lot of these tariffs are in place. And you can look at the list of tariffs. Here we go. 15%, 30%, 15, 20, 15, 30, 15, 10, 25, 19, 15. Canada, massive, 35. That's probably what's driving most of the market down. 15, China deal has been pushed back again. Major trading partner, it's been pushed back again. You can't forecast this. We don't know what it's going to be. We don't know when it's going to be. That's even worse than knowing the number. 15, 15, 15. EU 15, you've got all of these 25, 40, 18, 15, 19, 30. These are the highest tariffs we've basically ever seen. Switzerland 39%, and just a baseline of 10% for everyone as well. So that's obviously the main concern we're having right now. We cannot understand what the impacts of these tariffs will be on the companies and on the economy and on inflation. So that's why the market's like, oh, should we be at all-time highs right now? Probably not. And that's why it's selling off. And that's why I've been very cautious. And I've said the month of August is probably not going to be the best month. I'm not a fortune teller. I don't know exactly what's going to happen, but my thoughts, as you've heard me say over the last week with XRP, as soon as that rally came to an end, around $3.50, I said, be prepared. We're going to see $3 again. We're probably going to even possibly come down to $2.62 on XRP in the month of August. And that's already playing out. Now we're below $3. Everyone that was telling me on X or even in the chat, some of you were saying XRP's got $3 as a base. It's not never going below it. Well, today we saw $2.89. But let's get back into the facts and the story. So, good earnings. Apple best, Microsoft good, Visa good. But why Q2 might be the high point? Analysts warn that the full impact of the August 1st tariffs will not show up until Q3 or Q4. Many large firms cushioned Q2 and early Q3 results through inventory stockpiles, hedging strategies, and pricing power, but these buffers will fade. They're going to run out of inventory. All the stockpiling they did, well, at some point, they're not going to have that stock anymore, and they're going to have to pass on the effects or take it in on their bottom line, reducing their earnings or bringing inflation to the market. That's sort of the two impacts you have, unless you're a fully US company, which is unrealistic because not many are. at the moment. Anyway, corporate guidance reflects this caution. Only 12 of the S&P 500 firms issued positive Q3 guidance, while 13 issued negative outlooks, with most warning of input cost pressures and demand uncertainty. Earnings surprises are averaging around 6% above estimates, which is solid but below 5 to 10-year averages, signaling results are good but not exceptional. Tariff triggers repricing shock, what markets miss. So why are we down? We knew the tariffs were coming into place. Why are we down? While the August the 1st tariff deadline has been well telegraphed since April, several key elements of the final executive orders caught markets by surprise, contributing to a sharp risk-off move across equities, commodities, and global forex. The expectation, a calibrated policy shift. Markets had largely priced in a broad tariff rollout affecting dozens of countries. However, many expected a softer outcome. We expected last-minute diplomacy to reduce rates or delay implementation for key trading partners, including Canada, Mexico, EU, India, and China. We expected a 25% ceiling on most new tariffs, with steeper rates reserved for geopolitical flashpoints. We expected partial exemptions or phased rollouts to prevent immediate supply chain disruptions. Instead, they were more severe and less negotiated. The policy arrived more aggressively than expected. Tariff rates far exceeded forecasts. Canada 35%, Switzerland 40%, Laos and Myanmar 40%, Syria 41%, all well beyond the consensus estimates. Only 8 countries secured deals. These are the reasons why what we didn't expect, what the market didn't take into account, and why the markets are down. Only 8 countries secured deals before the deadline, far fewer than anticipated, leaving more than 90 trading partners subject to higher baseline rates. Canada's treatment shocked markets. Tariffs were raised despite ongoing talks, interpreted as political rather than an economic signal. That Canada tariff is possibly what's driving this down. Massive trading partner, massive tariff. China's status remains unclear, with no formal resolution or phased plan, adding ambiguity at a time when clarity was expected. A new transshipment rule imposed a 40% tariff on goods rerouted through third countries to evade duties, creating fresh compliance risks for global exports. There's no more sending it to a country that has lower tariffs and then bringing it into the United States, because you'll be hit with a 40% tariff. There goes that as well. So, why did the markets react sharply? Wider than expected reach, fewer reprieves than forecasted, inflation implications. These tariffs raise import prices at a time when the Federal Reserve is already reluctant to ease further, amplifying inflation risks. Policy unpredictability, last-minute rate escalations, ambiguous carve-outs, and threats of future adjustments create a sense of instability, not resolution. Remember, if there's uncertainty in the market doesn't like that. If we had certainty, if we know what's going on, then the markets can price in. Right now, there is a fair amount of unpredictability about all of this. Earning risk is ahead, with many companies still relying on pre-tariff inventory. Margin pressure is expected to intensify in Q3, Q4 as cost filters through global supply chains. I've got the chart of the S&P 500 there. The macro fallout already in motion. The Eurozone is, if you are watching with us live, please do hit the like button, subscribe if you haven't done so already. I'll be going into your comments and questions in a second. I'll be showing you the XRP chart. I'll be telling you how much further I think this is going to go down, or at all, if any. We've got updates from Martyn as well with what he's doing. The Eurozone is expected to be among the hardest hit. Economic forecasts now estimate a 0.3 to a 0.5% drag on the Euro area GDP growth, with Germany particularly exposed to its heavy export reliance, In short, what was expected to be a structured policy implementation turned into a broadside, prompting a repricing of global trade risk and fueling the market's pivot towards defensiveness. The tariff shock is no longer hypothetical, it's live, escalating and bleeding into supply chains with earning expectations alike. There is the full list of tariffs. You can see many above 20%, even some around 40%. So the tariff fallout, industry and diplomatic flashpoints. The tariffs are already reshaping industries. Let's just keep an eye on the markets. XRP is being bought back up as we speak, which is a very good sign. You've got XRP approaching $3 again. You've got the S&P 500 trying to bottom out, but we don't know if it will. Let's have another look at the crypto markets. Bitcoin is getting bought up again, still down on the day. But the whole idea of Bitcoin dominance going up is probably still playing out, and it is. This idea that we've been talking about for over the last week or so about this double bottom of Bitcoin dominance, Bitcoin leading the markets, altcoins bleeding against Bitcoin, is still going on as we speak. Let's just get all the facts and then we can go into the charts and your thoughts. The tariffs already reshaping industries and international relations, auto and tech. Auto parts and vehicles from the EU, Japan and South Korea now face 15 to 30% tariffs, while semiconductors and electronics from Taiwan and Malaysia are hit with about 15 to 20% rates, risking supply chain disruptions for the US manufacturers. Agriculture. Fertilizers and specialty inputs from Brazil and Vietnam are subject to double-digit duties, likely raising US farming costs just ahead of harvest season. Global pushback. The EU, Canada and several Asian economies are preparing retaliatory tariffs and WTO challenges, raising the risk of the new tit-for-tat trade war. That's also something that's slightly being priced in, but not yet. The idea of these countries are just going to take the tariffs, well, that's not always been the case. If you have a big rise up, if you want to call it, there could be several economies that are not very happy with this and they do a coordinated attack. It's not really an attack, it's just giving back what's happened, and they could be raising up these tariffs as well as a trade war could start unfolding as well. So that's always a risk that hasn't started yet, but we've seen how bad those risks get when, for example, US and China are in those wars. Well, the EU, Canada, Asian economies, some of the higher tariffs could start hitting back. Market rotation. Investors have rotated out of multinational stocks, favouring domestic defensives like utilities, while commodity-linked stocks have underperformed due to fears of weaker global demand. And then we come on to the big one. The Fed policy and inflation risk. This is big for the economy. So the Fed has held interest rates steady at 4.25 to 4.5%, maintaining a hawkish bias due to persistent inflation risks. Tariffs have amplified these risks by increasing input costs across auto, tech, and commodities, which could add 0.2 to 0.3 percentage points to PC inflation in 2025. That's what JPMorgan says. As a result, markets have sharply reduced expectations for rate cuts, with futures pricing in less than a 60% chance of a rate cut by September. You've now got the chart changing. This was very much in favour of a rate cut in September. Now what you have is it in favour of no rate cuts in September. So that could be pretty bad for the markets, and that could cause Trump to get very, very angry. We know how he feels about rate cuts. I'm sure a lot of people also feel the same way. But does the Fed feel the same way? No, they look at the data, and the data is the economy is strong, inflation could be heading up, and they want to control that. Risk, and the next big thing, there's a few things we're talking about today, and the next one is recession risks are climbing. Let's not forget that there's always been this talk of a recession, and this could be increasing those chances. So the combination of tariffs, inflation, policy uncertainty has pushed recession probabilities higher across Wall Street. Here's a few analysts. Goldman Sachs has said a 45% US recession odds for the next 12 months, up from 35%. JPMorgan is saying 40% odds of a US recession in H2 2025 and 60% global recession risk. The IMF raised US recession risk to 40%, citing financial instability and sticky inflation. Those are not brilliant odds, but we do know recession comes, great buying opportunity, you normally recover quite quick. But we will see. This is we're talking sort of 20% plus crashes here if a recession comes into place. Terrible for the economy as well. So take that into account. that these odds are now climbing for a recession. So the consensus scenario is slow growth with sticky inflation, not a confirmed recession yet. However, several analysts warn that a tit for tat retaliation or sharp drop in business confidence could tip the US into contraction by late 2025. We're coming to the end of this, so do stay with us. The market valuation and investor takeaways. The S&P 500 is trading at 22 times forward earnings, leaving little margin for error. While current earnings have cushioned markets, and any disappointment in Q3 or Q4 results or macro data could trigger sharp downside risks. We're basically at quite high levels of forward earnings. There's not much margin for error. Goldman Sachs maintains its 7% EPS growth forecast for 2025, but warns that tariffs, cost pressures, and slowing capex could derail if consumer demand weakens. The bottom line, the story of Q2 earnings is one of resilience, but also narrowing strength. While tech leaders continue to deliver, the broader markets faces challenges from tariffs, inflation, and slowing growth. Recession odds are climbing, and the Federal Reserve remains constrained by higher for longer policy, leaving few safety nets. The coming quarters will be a test of how well companies can manage risks, costs, and how much longer consumers can sustain spending in the face of trade shocks and policy uncertainty. For investors, the message is clear. Enjoy the earnings wins, but do not ignore the warning signs gathering on the horizon. And this is the information that will get you prepared for that, whether it comes or it doesn't come. Let me go to your comments and give you some more of my thoughts before we go into some of the charts and some of the requests that we've already had a request come through. So I'm conscious that we need to go do that chart review as well. So let's go up and see. We did have a comment from Martyn over here saying, I'm buying big all-in tax lots. I don't even know. How can you buy tax lots? I'm not used to Robinhood. We don't have tax lots here. I'm buying big all-in tax lots. I think Martyn is saying he's buying the dip. I think that's what I take away from that. I'm buying big all-in tax lots. I'm sure the chat will tell me what that means. Let me know, guys. What does buying big all-in tax lots mean? I imagine Martyn saying he's buying the dip. That's what I'm taking away from it. How many likes do we have so far? Let me refresh this. 338 people watching. Let me refresh this. We should have 160 likes at least. Let me have a look. We've got 62 likes. What's going on? I'm going to put on the music. We're going to get into the chat. We're going to get into the charts. I'm going to tell you where I think this is going. But let's put the music on for about a minute. And everyone, please smash the like button. If you've already hit the like button, then come over here in the comment section and hit the like button here as well. Let's do it.
The year is 1991. Birds and people are living together in seemingly perfect harmony. Until one day, a young man catches fire. This is Phoenix.
You've been knocked down and got up again. In a corner, you're surrounded, no defenders. You've hid your fury and kept it in. But it's time now you ignite and turn to embers. Like a phoenix, you burst in a fire burn. A thirst and desire, you transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire burn. A thirst and desire, you transform right up in a flash. You spread your wings to rise from the ashes.
If you have just tuned in, please do hit the like button. Let's see if we can get above 150.
Get ready for verse 2, Electric Boogaloo.
You see the truth behind the veil, and you know that they're just looking for attention. Oh, you don't let their ruthlessness prevail. Oh, it's time to light your fire
I'm just getting some charts ready for you guys. How many likes are we on now? 104. We need 50 more likes. Can we do it? Let's see if we can do it. Thank you everyone for smashing that like button. We have Martyn coming on live to give us his trades, his thoughts in just about 20 minutes time. Let me go through your comments and bring you some charts as well. There's no way the bull market's over, it's just starting. Thank you, Stephen Mariano. I have been buying these dips, always be prepared for all situations. I'm not here today to tell you the bull market's over or the bull market's getting started. I'm here to tell you be prepared for all situations. What's happened today is swinging the balance into possibly the bull market being over, but I'm still optimistic. Good morning, everyone. I think it's just getting started. Thank you. Good morning, Sensei. How much lower do you think XRP will go? I think it can go down to 262. If the bull market's over, then it can go down to $1 as well, but I don't think that's what's happening. Let me close that and put... Are we on Do Not Disturb? Let me make sure. So good morning, bull market is dead. Top of the morning, Sensei and family. I don't see it as dead. I see it's delayed. So much happening behind the scenes. Yes, there's a lot going on. Where can I pay? Yes, I've got your chart request. We'll do it in a second. It's just a hiccup, a mere chance to buy some more. Plus, if you're young enough, these crashes don't really hurt us like that as long as you don't plan on pulling the money out today. Yep. It hurts people that that might be retiring today. It hurts people that are in leverage positions and getting liquidated. Earnings are great. Increased GDP to 3%, nowhere near a recession. Yes, we're nowhere near it yet, of course, but these analysts are forecasting a 40% chance now. So keep that in the back of your head as well. Once you learn to buy and sell without emotion, these red days are becoming normality until, you take the ladder up and then the elevator comes down. So everything seems normal. Everything seems like buy the dip, buy the dip, buy the dip. And then at some point in history, every 2-3 years, you get a massive crash. And then because you've been buying the dip, no money on the side, potentially you can't take advantage of it, which is still fine long term because you've been buying. Thank you for everyone who's still hitting the like button in the comment section. Very much appreciated. Ooh. Why is my... there we go. Let me just quickly do this chart request before I forget. Let me go over here. XDC is not bothered by this at all. Well, let's have a look. XDC USD. We've heard a lot about XDC recently. Yeah, it doesn't seem bothered at all. It's flat on the day. Should we put it onto our watch list? Let's put it onto our watch list. XDC USD. You're completely correct. It's not bothered at all. I've seen this a few times where something is not bothered at all, but then the sell-off continues for another day and it comes crashing down. So nothing is immune, but temporarily it certainly can be immune. It's not bothered by it at all. I would say still be careful because if the sell-off continues, then this can come crashing down like a rock. However good the project is, it can certainly come back down to these like 0.65 levels, which would result in a 34% correction if the market stays down. It won't be immune forever. However, if we do get a bounce back in the broader markets, then I'll be looking to target around these levels 10 cents and then potentially 15 cents on the downside. I would have a little bit of money on the side to be buying it lower around 6.5 cents. If we do come that low, then I've heard a lot of good things about this project, so I will be buying it probably around 6.5 cents, but I wouldn't be touching it right now, even though I don't own any. I don't see any point. Let me give this link to Martyn. I don't see you. So XTC, thank you for the chart request. You are completely right. It seemed unaffected. That shows a lot of strength, and what that could mean is if the markets do bounce back, this will come up a lot more. But if I would just say be careful. Nothing is completely immune. The supports are around 8 cents, 6 cents. I'll be targeting probably 15 cents as the next sort of level to the upside, and also 13 cents. The bull market target for something like this, what's the market cap? Market cap is 1.5 billion, so yeah, it can go up a lot, can't it? Yeah, I would say about 30 cents and above. A token like this could certainly even come close to $1 or hit $1 in a bull cycle like this, especially how the chart looks overall. It bottomed out, it's showing strength, it's up on a day where everything else is down. If the bull market continues, you get an altcoin season, you'll probably blast past these previous all-time highs. I know a lot of XRP holders like this as well, and a lot of the money flowing into altcoins will come from XRP this cycle, in my opinion. So you've got targets of 30 cents and $1 if we get a proper altcoin season. But that is no guarantee at all. Thank you so much for the chart request. We're going to see if we can get Martyn live on the show, but he's not coming through at the moment. Oh, yeah, now he is coming through. So let me bring Martyn on the show. Let me go over here. Martyn, welcome to the show.
Good morning, and thank you for having me on the show. Great show as always. Great information, great newsletter. Everybody must read that. I've been reading it this morning while shaving and having and cleaning my teeth. So go and read Sensei's newsletter this morning. Today's show is going to be a very different style of show because I've got my red jacket on. I'm going to be busy. I'm buying. I have $250,000 in play, and what I meant in margin. And what I meant to what was Sensei saying about tax lots, what I'm doing is I'm buying, but I'm also waiting and delaying because no one's mentioning this. But in 20 minutes' time, everything could change on the jobs report. If the jobs report is bad, we go down 15, 20%. If it's good, we could rally very quickly. Yes, everyone's focusing on the tariffs, but more importantly is the jobs report this morning. It will turn everything one way or another. So what I'm doing, I've got about 20 trades currently in play. This will be one of my this will be the busiest record day ever of trading. So what I'm doing is this. I am very, very, very bullish to buy the market because the Mag 7 is virtually inflationary proof. We've seen it before when inflation got bad, the Mag 7 grew exponentially. 30% of the S&P, the Mag 7, the tech, they don't mind rates being up for longer. In fact, they make money from it. It crushes the competition. It's bad for everybody else. It's a tough world out there. But if you're Amazon, you're Microsoft, Google, Apple, look what Apple did last night, one of their best earnings in years. So it's a buying opportunity, but you've got to know how to buy, when to buy, and what to do with it when you leave. So what I'm doing is I've got margin fully turned on. I've got $250,000 in play. I've got buy orders lined up at different levels to buy on the way down, but I've also got them to sell on the way up with tax lots. So yesterday I started buying these dips because I was very happy with Meta, Microsoft. I knew Apple would do good. Amazon did good. It was the guidance that threw everybody and the over expectation, but the earnings was good for Amazon. So we can buy those businesses, but we have to know how to buy them. And if we're buying on the way down, nothing will go straight down. Things go up and down. I've got my tax lots set in place. So I've gone back to the ones I bought yesterday at higher prices at 2%, some of them 3% higher, and it could spread throughout the day. And as we bounce back, those will sell to clear off more liquidity, give me more available margin, and then buy on the way down. So as I'm going down, I'm buying bigger, just like what I did before. Remember Liberation Day when I ended up timing and buying the very bottom? This is your chance to do it again. Now, this is not financial advice. Do not follow me. This has taken me 4 years of discipline to get to this level. It's taken me 4 years to get this amount of capital, 4 years to get this amount of discipline in myself, and 4 years to get this size of margin by building up my portfolio over a long period of time. So I'm not recommending anyone follow my trades. I'm not recommending anyone do what I'm doing, but this is what I'm doing. I'm going to buy heavier and heavier and heavier. I've got larger buy levels on the way down. We could go down 20% in 15 minutes on the jobs report. And as we start to come up, I will start to sell those tax lots. They're already set in. I've already got 2 tax lots set in at washes. They're not going to make any money. They're not going to lose any money. They're not going to make any money. They're just going to free up money as I go down. I can't time the bottom, but I will get the bottom by employing this discipline. It requires patience. It requires discipline. It requires understanding that what the markets are doing, why they're doing it, what the jobs report reaction will be. So it's going to be quite a dramatic show. I might not be speaking very much because I'll be just focusing on trades of $250,000. Add that to my cash. It's my stocks is $500,000. So join me for the show. It's going to be dramatic. It's going to be a huge day, but don't jump in. And also, I am only using my margin and my positions to buy the S&P 500. No single stocks. Even though XRP is down, I haven't bought any more. Even though Bitcoin is down, I haven't bought any more. I've gone from 17 grand in crypto down to about 16. I've lost $1,000 overnight. Not a problem. I'll be buying a lot more Bitcoin. No more XRP. I have plenty. I'll be buying more Bitcoin when Bitcoin drops 10 or 15 or 20%. Otherwise, I'm leaving it alone because it can go up. It's a lot more volatile, a lot more violent. It'll amplify whatever the market does. And if I waste my margin on crypto, it reduces the amount of margin I have by the margin maintenance risk level. It will take away my buying power and won't allow me then to have money to buy a 20.
Oh, we just lost Martyn. Hopefully he'll be back with us. Let me just go to the screen over here. Hopefully we'll have Martyn back with us. Or did I lose service? Let me just have a look. I think we're good. Are we good?
To have money to buy a 20.
Oh, we've got maybe that was me. Let me go back to Martyn. We've got him back. Sorry, Martyn, we've got you back.
No problem at all. I don't know what you missed, but anyway, I wish everybody the best. I'm going to, I'll see you in 15 minutes. Sensei, keep your eye on the jobs report. And if you want a bit extra time, please carry on through the jobs report because you've got the audience and you will want to react to what the jobs report does because I'm going to be busy trading anyway. So I'm not going to be the most entertaining to watch because I'm just going to be buying and selling in silence. So please carry on if you wish to for another 10 minutes and I will look forward to your audience when you're done. But good luck, everybody. Be careful, understand what the market is telling you. Don't just go buy the dip with no next move in place. This is a game of chess. I've got about 10 moves, all buy orders set on the way down, on the way up, already placed. So think of chess, 10 moves, don't overreact. Let it come to you. Wait, I've got my play still in play of Coca-Cola. That will pop up on this uncertainty. I will be able to sell my Coca-Cola for a wash if necessary and then buy the S&P, which is now a better buy than just waiting for a profit on Coca-Cola. Sensei, I'm going to hand it back to you. Good luck to everyone. I wish everyone the very best, and I look forward to sharing my show with you this morning. Sensei, back to you.
Thank you very much, Martyn. We all look forward to watching you trade live shortly. Even though you might not think it's entertaining, I'm sure everyone would like to see what you're doing. So we'll be going over to Martyn just after that job report comes out. So I will wait for a link to send you guys to, but we will wait and we'll cover the jobs report here live on the show in about 10 minutes time. We've seen Bitcoin now bouncing back. It is removing a lot of those gains. I want to have a look. Is it Bitcoin dominance coming up or is it the altcoins? But yeah, the altcoins are bouncing quicker than Bitcoin at this current moment in time. That is as expected. Let me go over to your comments because I am conscious. I said I'm going to go through your comments. Any tariffs postponed? No. XTC is on fire, thank you. Has anyone tried physical AI? No. XTC infinite scalable. It cannot hold. Be patient and watch for 250 to 6 years. It all depends on panic selling and profit taking. Patience is key in the game. Have a plan for yourselves. Yes, everyone has to have their own plan. No point just following someone else. It doesn't work. Big retest, pretty exciting. I mean, there are other factors too, but be patient is the main point and have a plan. Yes, that is the most important. Have a plan. Where is the $10 XRP? Well, if you've been listening to the shows, we said 7 days, $10, very possible. That was back when it was a parabolic run. As soon as that parabolic run ended, I said there is no chance anymore because the parabolic run, if you look at XRP's history, it gets things done very quickly. So if it goes on a run, there is no way to doubt that $10 XRP wasn't possible a few weeks ago. As soon as that parabolic rally came to an end, I said we're going down to $3. Parabolic rally's finished. We're waiting for the next leg up, which could be in September, October, if we're going off ETFs, or we could be in a bear market by then. We don't know. But it was very possible we got it to $10 XRP, but the momentum shifted and it went away. So there we go. Do I think we're going to have a $10 XRP in 7 days from now? Absolutely not. It is weird. This is the only channel that changes my name. Normally, I'm Jesse. I know I can change again. I did it here before. Just weird. Love your show, Sensei. I never try and miss it. Thank you so much. Jesse, you just go... This is not the only channel. This is YouTube now. YouTube is changing to usernames. They've trialed it before, and I think they're bringing it back into effect. So what you need to do is go onto your username and change your username. And I recommend everyone does that because some people have very different names, and I'd like to recognize the audience. But for example here, Golden and the Rabbit RM4HZ. That's a pretty bad username. You should go and change it. XRP Army Persevant. Thank you. Don't really know what that means. Good day for yard work or anything to keep looking at the red day. It will bounce back eventually. Relax and understand this is just part of it. Yes, but there's also a time where it won't bounce back. There's also something called a bear market. There's also something called a recession. There's also something called a crash where we might be so used to buy the dip, that we've forgotten that crashes can occur and sideways action for years can occur. That is always a possibility. So it's not just as easy as buy the dip, you'll be fine. If you're looking at a long enough time frame, then yes, you probably will be fine depending how good or bad your altcoin is or your stock is. You can be very confident with something like the S&P 500, buying the dip, cool. You can buy the dip, you might not be able to get the best price if it crashes, but as long as you stay holding and you don't have leverage, then you'll be fine in 5, 10, 15 years. If you're looking at something like an altcoin, a random altcoin, and it goes down 95%, well, you could have bought a lot more of that altcoin, and all you've been doing is buying these 1%, 5% dips, where in fact it goes down 5% 100 times. And then you're down 90%, and then it goes down 5% 100 more times, and then you're down 98%. So it's not as simple as buy the dip for stocks and crypto. Or individual stocks and individual crypto, because at some point it will take at some point there will be a crash, it will take the elevator down, and it's not just as simple as buy the dip. So just keep that in mind as well. Is anyone hearing anyone buying H-bar? Lucas A's call to action for those who don't know Jerry and Elba. Please keep them in your prayers. Major changes in health and life impacts going on. Send as much love their way as possible. Yes, please keep our two of a big part of the channel, Jerry and Elba. Great contributors, great people, lovely people that are part of the family. So do keep them in your prayers. They are going through a tough time. Have been in crypto for 6 years, not a get-rich-quick scheme. Exactly, CB, you know what I mean. I just got my XRP at the bottom again. Like Martyn said, you don't know if it's the bottom, Dallo. At the bottom of this move, maybe. Can I go lower? Yes. So be careful. Congratulations on your purchase. You're probably up right now. But you can't call it a bottom because we don't know if it's a bottom. Well, maybe if you look at the smaller time frames, you can call it a temporary bottom or the bottom for now. But I think I understand what you mean. You just bought it at the bottom of this this part right now. So congratulations to you. Like Martyn said, I'm buying future prices, not selling. Yep, long enough time view, then you should be fine. Especially like this is my opinion, not financial advice, but I think tokens like Bitcoin and XRP, you'll be pretty safe in 5-10 years time. They'll probably be much higher prices than they are today. S&P 500, you buy it today at this 3% dip. Yes, it might go down another 25-30%, but in 5 years time, you would think they're going to be much higher prices. You look at a random altcoin like Aave, Mana, APT, Algo, EGLD. Even though there's some good projects I've just mentioned, I'm just looking at a watch list, you can't be as confident with them. Buying the dip randomly, 5% dips, 5% dips, you can't be as confident that they're going to be around in 5 to 10 years' time. There we go. That's why I put XRP in a different category. Yes, it's still quite high risk, but me personally, I think XRP is going to be something that sticks around for 20 years. Well, 10, 15 years, maybe 20 years' time, there might be a better technology, who knows? But for the next 5-10 years, I'm quite confident in my XRP investment. Donald Moody, H bar is a good one to hold. Thank you, Savage Faith. Let me try and get through these comments. Nice jacket to Martyn. I need to balance out my portfolio. I'm pretty heavy on crypto, 80%. Pretty similar to me. Thank you. I just didn't understand how it was doing that. You gave me a much better insight on XTC. Fully appreciate it. As always, great information. Bounce back. Thank you so much for the support. It really means a lot. Nice jacket. Yes, Martyn had a nice jacket. Yes, we'll be going over to him in about 10 minutes time, just after the jobs report. We'll be getting a link very shortly, and then 5 minutes after the jobs report, we'll be going straight over to Martyn. Or sending you at least to his chat. Got to protect the chat, Sensei Crypto. Thank you, Mike. Always doing a great job as a moderator. Besides, Sensei doesn't have clickbait, just Martyn. Teasing, calm down. What are you talking about, Savage Faith? Who said something about clickbait? Enhance the rooster sound. We should have rooster sounds instead of the bell. I don't cover the bell, so there we go. NPF coming. What's going on there? Let's have a look. Thank you, Savage Faith. What's going on? Oh, he's just spamming. Yeah, please don't spam the channel. Adding flair to my portfolio. What's a good support? Well, I don't give financial advice. Everyone's buying position might be different. Flair could come down 90% in a bear market or even more. So keep that in mind. But if I look at Flair, FLRUSD, it's been doing quite well recently. Flair. Where is it? Here we go. Get to a 3-day time frame. Next level of support is potentially around 2.2 cents. Main one being around 1.8 cents. I mean, if you're holding long term and you want to take a risk on a project, then it doesn't really matter whether you buy it here or 50% cheaper if you've got the same sort of targets as me. But would I be buying here? Not me right now, because I've bought much lower. So I would be looking at 2 cents, 1.5 cents, around that level, potentially. But I don't give financial advice. Your position will be very different. XRP will be just fine. God bless Jerry and Alba. Yes, prayers and God bless Jerry and Alba. What dropped crypto? The Trump tariffs dropped crypto. The bull market is far from over. We will see. No one can say that right now. I agree. I'm in the camp that the bull market isn't over. I think August will be a pretty bad month, but I don't think the bull market's over. But we will see. I think the bull market I think we might potentially get a recession, but towards the end of the year, or the beginning of next year, I think that will put an end to the bull market. I think we'll have sort of a dip in August, which is starting. I've said this for a week now, and we can definitely see it playing out now. August the 1st, and here we go. We're already starting the dip. How low can this go? Maybe 5 to 10% on the S&P 500, which isn't too concerning, depending on what your position is and how much leverage you're using. But I would say we could get a recession towards the end of the year once we start looking at Q3, Q4 earnings. When that starts happening, because even when rate cuts come, I think everyone will get excited from the first rate cut, whether that's in September or October, and then you'll start pricing in, well, this is what we've been waiting for and nothing really is happening. And we've seen previously when rate cuts start, you can actually go into a bear market. So that could happen towards the end of the year. Bear market, recession, put an end to the bull market right after altcoin season. That would be perfect. And I think that's what could happen. I just don't want it to end the bull market right now, because Bitcoin's in a good space, all-time highs. XRP is on the brink of breaking all-time highs. ETF is just around the corner. So hopefully it's just going to be a dip in August and then back to business as usual for a bull market, end of the bull market, Bitcoin going to its next targets, Tom Lee's prediction coming right, MicroStrategy's prediction coming right, lots of analyst predictions coming right, $150,000 Bitcoin towards $250,000 if you're listening to us. Some other people, XRP ETF comes out, everything goes up, and then you get the recession 2026 Q1 or end of 2025. That could be a real possibility. That's sort of my base case of what I'm thinking at the moment. Let me go to the jobs report. That will be on Bloomberg. So let me go over here. Let's see what's going on with Bloomberg. Let me unmute the site. Oh, didn't mean to do that. Unmute.
Language, no, not my words. It's the statute's language. In case there's a national emergency, and the president's declared a national emergency. So we feel confident. If it goes the other way, then we'll manage that. The reality is, the countries understand the type of leverage that President Trump has created. That's why they're doing these deals, and they're going to stick regardless of what happens in litigation.
That's where I wanted to finish, and we just have a couple of minutes. We are out of time with you, I know, but I am curious what the game plan is. Should there be some sort of overruling of IEPA? Do you already have Section 232 and others lined up?
Well, listen, we always have all kinds of plans, and I'm not going to go deep into our strategy here, mostly because we're pretty confident on the current plan. But we will do whatever it takes to make sure that the president can continue to rectify the trade deficit and change the global trading system. This is a historic thing. This is once in 100 years that you have the chance to reorder global trade like this, and we're doing it, and we'll use whatever tools are necessary to do it.
U.S. Trade Representative Jamison Greer, thank you so much for being with us. I'm not sure when you sleep, and we've been talking about that with you and Scott Bessent as well. Ambassador, thank you for your time. I appreciate it. Really a slew of changes at a time when there are some real questions over what the ramifications will be, but historic in terms of magnitude, that's for sure.
Oh, yeah, historic. These are the highest tariff rates we've seen since the 1930s. What was interesting, he said that a lot of these countries want to manifest deals now. I want to know, I think the market wants to know between now and August 7th, I think the market's trading on this, they are still in negotiating mode. He said he woke up to a number of text messages from his counterparts, from negotiating partners, wanting to get to end. Potentially, is this the final moment where we can see these concessions the administration has wanted from places like India, maybe when it comes to things like Russian oil, from Switzerland, maybe things like pharmaceuticals, from Taiwan when it comes to semiconductors? Is this the final stretch for some of these big trading partners?
Meanwhile, we are just about a minute away, less than a minute away from the payrolls data, and a real question, Danny, about how much the ramifications.
Stay with us. We're about to bring you the jobs report. Less than a minute away now. We're going to bring that to you live right now. Let me fast forward. What time are we on? Yep, let's bring this over here. Okay, jobs report. This could move the market. Martyn will be trading this behind the scenes.
Has been able to look through some of.
We've just heard that there could be deals being made. That's why the market's bouncing back. We'll see. Will deals be made? That's why the market's bouncing back right now.
That is the median in a survey of economists for the number of jobs created in the month of July. We're also expecting the unemployment rate to tick up by 10 basis points, 4.2% from 4.1%. The whisper number is 120,000. The potential of what is the break even going into that right now. S&P futures are lower. Right now, let's head over to Michael McKee with the numbers. Mike, what do you see?
Well, we got a very disappointing number here, and this is going to get Wall Street's attention. 73,000 jobs created during the month of July. The forecast, as you said, was for 104, and we came down from 147 last month, looking to see what the
not good, not good.
Right now, the three-month revisions add to payrolls by 35,000, so that has to be factored in. Private payrolls, 83,000. They were 74,000 last month, so it looks like government has subtracted from the overall level of jobs, and that would be a rebound or a going back basically to the seasonals issue that we saw in June. Unemployment rate, 4.2% as forecast. We'll look at what the three-digit number is in just a second. Average hourly earnings up 0.3 as forecast. Average hourly earnings on a year-over-year basis at 3.9%. They were 3.8% the month before, so it looks like a little bit of a gain overall for people. I'll dig into this some more and let you figure out how the markets are reacting to this disappointing headline number.
Mike, that sound that you hear, that whoosh, is the two-year yield plummeting, and that is what we're seeing, down more than 10 basis points in response to this weaker than expected number. You can see
not a good time to have this number come out.
Losses that they saw from earlier, but across the board, a bid into bonds is the big trade. 10-year yields down 5 basis points. The two-year yield, this really is the key moment, down 12 basis points to 3.84% as people take a look at what this labor market report report means for the Federal Reserve. In the currency space, we had been seeing quite a bit of dollar strength on expectation that the Fed would have to remain really strong with policy. We see a complete reversal, the euro bouncing versus the dollar, 114.81, as people assess that maybe this will be a Fed that will get pushed into cutting rates sooner and faster. Really, the idea that you could see the number come in softer, as well as the unemployment rate also ticking just slightly higher, concerning or at least provoking a response that would imply.
So there we go, the numbers. 104,000 was forecasted. We only got 73,000. We've got yields heading up.
Lower than expected, but manufacturing so much lower. Actually,
Yeah, you got 11,000 jobs lost in manufacturing, and we had.
Well, that's enough of that. Let's have a look at the markets. Disappointing data, but does that really mean the markets have to come down? Well, the markets do weird things. They might drop off and then come straight back up if they don't digest it properly. We'll have a look. Let's see what the S&P 500 is doing right now. Yeah, not looking good. Down nearly 1% now, down 0. Let's see how it's reacted to that data. It has come down, it's trying to be brought back up, but it looks like the trend down is going to be continuing for today. It looks like this could continue the sell-off going. It looks like another lower high. Next up, another lower low. I did put in the newsletter today in the chart of the day where I'm targeting this correction to go down. I wouldn't really be looking to buy until we start heading down another 2 to 3%, at least coming to test the previous all-time highs on the S&P 500. If we look at that on VU, let's go on to VU. Yeah, that would be coming back down to levels of 563, currently down pre-market, so that would be another 2% down on VU, maybe slightly more as well. But that would be where I'd be looking. Previous all-time highs would, even if you're still bullish, you just look at a bounce to previous all-time highs. Power Surge Electric. Anyone else having problems logging into Robinhood? Well, I don't use Robinhood, and mine would be different because I'm in the UK. Hopefully someone else can answer in the chat. Is anyone else having problems logging in to Robinhood? Please help out a fellow member, powersurgeelectric.energy. And unemployment rate was 4.2% as well. Estimate 4.2. Unemployment rate is about the same, sticking around that 4.2% mark. Let's see if we've got any more breaking news. Let's see, I'm just checking some sources. Nothing there. Donald Trump is angry at Jerome Powell again. Jerome's too late. Powell is a stubborn moron. Must substantially lower interest rates now. If he continues to refuse, the board should assume control and do what everyone knows has to be done. So we've got calls for firing Jerome Powell that are escalating. And as I said last week, this is escalating to an area which is not very good for the independence of the Fed at all, which will bring some more volatility into the market. So breaking news after breaking news today. You can keep up to date with it all in the newsletter. On the newsletter, we've got some top stories for you guys. I really do recommend everyone goes and checks out the newsletter. Here is the link for the newsletter. Please do go and check it out. Let me see. Can we have a show link? I'm going to ask that to Martyn. We've got some top stories here. We've got Europe inflation steady, but ECB walks tightrope. They don't want to reduce rates either, even though they're much lower than the US. We've got Coinbase earnings yesterday, quite a lot of information there. Euro crashes on costly US trade deal. Is Europe the biggest loser? We'll look at that as well in the newsletter. Big tech AI spending spree finally delivers. We're talking about the big names there who are getting returns on their AI investments. So that is changing the tide a lot for those top companies, which will really help Nvidia as well. Investors question US market dominance despite record highs. People are moving away from the US, and that's why I always preach for a diversified portfolio worldwide, not just US. I do think the US is a superpower. I do think US is, if you're a high-risk investor, you would want more in the US, but I would also say you want to be diversified across the world as well. So we've done the deep dive report. Let's see which story to cover next. Let me just go back to markets, how they're reacting now. Let me go into VU because I know a lot of you like covering VU. So let me go to VU and then let me open aftermarket trading on him. Where is it? Why can't I do it? Where's I have to go into the shorter time frames. Let me go into the 15 minutes session, extended hour. Why is that still not showing me? Here we go. So VU is not at the lows of the day yet. It's at 575. Lows of the day would be 574. Let's go on to the 4-hour time frame, get some more data. Is there any support around these areas? Not really. Not really on a long enough time frame. I think you'll be looking more towards 562, 560. That would be your next sort of short-term support, but then you really are looking at previous all-time highs at that point. At that point, you're looking at previous all-time highs, 560. So I wouldn't be too excited at these levels unless you're doing some quick trades. That's the S&P 500. How is the crypto market reacting? There's a lot going on all over the market today. Bitcoin is back down on the day. We've also got XRP. Oh, we've got Martyn calling in. Let me bring Martyn onto the show. Let me go over here. Welcome back to the show, Martyn.
Good morning, guys. Lucas Aids and Sensei, thank you for having me on the show. Some major concerns here. I'm going through the fine detail of what you're not reading or what you're not hearing on the news. The jobs numbers are skewed due to the private sector. The numbers are a lot worse. The employment job numbers are a lot worse, hidden through the government. This is not political, folks. I'm all bullish. I'm always trying to find the good in everything. But we're going to actual numbers. Oh, did I just?
Well, you're back. You're back. You're all good. It was just a second.
Oh, okay. It does appear that a lot of these job numbers are a lot weaker. The Fed were right to hold rates up. Some people will argue now the Fed were too late. They've caused the problem. Some people will say, no, the tariffs have caused the problem. But the fact of the matter is these jobs numbers are terrible. We are looking very likely to be going into a recession if we're not already there. And these jobs numbers, if you look at the figures of the government hirings in the private sector, it's a lot weaker. A heck of a lot weaker. So my strategy is still the same. The Mag 7 will do well. The top of the S&P will do well. We could go down 20%. I've got my tax lots in place. So the moment those higher positions tick up, they'll be sold for a wash. Won't be selling for losses. No need to do that. But I will be buying on the way down. But I am pausing and I'm waiting for a much bigger drop. I'm waiting for a reaction because the headline is it's all okay. It's not too bad. It's not great. It's not good. But when you dive into it, this is number manipulation. We've got much worse jobs report than is being first anticipated. And that will become apparent in the next hour or so. People will notice that. But it will come through. So you're going to get a lot of volatility. People will pump this really quickly to dump it. Now, the market, my S&P is going up quickly now. It's about to hit its first tax lot and sell my top price, which is perfect, which is why I've got them already preset, and then I'll buy the lower one. So be careful if you're chasing this. The worst thing that people are saying today on YouTube is buy the dip. I heard you mention it a moment ago. Buy the dip. No, do not buy the dip. Understand the value. know when to buy, know how to get out of the higher price stocks using your tax lots. Be very, very careful, because like Sensei said, if you keep buying the dip, nibble, then it drops 20%, you could be 5 years before you see a return. If we do go into a recession, there could be years before you see a return. And now your money is stuck doing absolutely nothing unless you sell for a loss and then you destroy your own portfolio. So have patience, understand what's going on, read the small print. It's not good, folks. I know we're very bullish on this channel. You know, we're always trying to find the good in everything, but it's not good news. These job numbers aren't good. The economy has been damaged by these tariffs. It's going to get worse. And I'm not political. I just want everyone to win. I want to win. I want you to win. But be careful. There'll be pumps and dumps very violently, very quickly. I wouldn't go anywhere near your crypto today. If you do see crypto drop, just let it drop further. Don't just be buying every 1%, because if the S&P goes down 10%, then your Bitcoin, your crypto, your meme coins, they're going down 50, 60, 80%. So just be very careful. I don't want anyone to lose, and there's no reason to lose. The great businesses are doing well, but recession is here. Jobs is bad, and inflation could be coming back. We saw that yesterday with the inflation, and it looks like it's going to get a lot worse, a lot sooner than we anticipated. Good luck, everyone. I'll be live in a minute. Sensei, back to you.
Thank you, Martyn, for diving into that and bringing us the information that no one's bringing out at the moment. Let me go back to Bloomberg and see if there is a reason why we're popping. There's trade deals being potentially made behind the scenes, but we don't know. We've heard this over and over again. What I'm going to do is just quickly tune into Bloomberg and see what's going on.
About the breadth of jobs being added, should we add that to the ledger of reasons to be concerned about this labor market?
Yeah, absolutely. And this is something that certainly my colleague Tom Porcelli has been speaking with you about for months now, that if you take away government jobs in healthcare, i.e. the kind of non-cyclical, structural jobs, the cyclical job growth has been really weak all along throughout the whole year. And this is just really a continuation of that trend.
So what do we do from here, Mike, if we are still in this period where there is some weakening, but it's not weakness? The rally that we're seeing in the front end, is that something that you'd want to chase at this moment?
Yeah, you buy bonds, right? I mean, it's a big, beautiful bond market, and returns have been substantial.
Talking about the bond market, which is obviously not too interesting for us stock investors, but obviously a very important market as well. The S&P 500 is rallying in the last 15 minutes, as Martyn has just mentioned. Now it is coming off its lows of today, up from its lows about 0.5%. Bitcoin is also up from its lows, really starting to rally now. Bitcoin's turned positive again on the day. It's going to be a volatile day and a few weeks ahead, I imagine, in the markets, as the market digests these the tariff news, as it starts to digest the possibilities of recession that Martyn mentioned. I mentioned in the newsletter this morning. Once it starts to understand what these tariff deals are, once it starts to look into Q3, Q4 earnings and what that could start looking like. But we will see. Let's continue to look through some of these crypto positions. Most are still down. Let's have a look at Bitcoin dominance again. I do expect this to go up as well. Is that happening? Let's go back to the daily time frame on this. It is up again on the day. Bitcoin dominance up another 0.3%. It is on target to double bottom at these levels, and Bitcoin to outperform the rest of the crypto market. Let me go into your comments as well. Let me keep this open to make sure any news coming through. Nothing there. Okay. How the numbers, Martyn? Well, you heard Martyn's reaction. Martyn, good morning. There is no reason to put money into the market until a 5% pullback. Thank you, Tim Rogers, for your thoughts. Right. Let me just take care of that. Where was that? Has that already been taken care of? There we go. Get rid of that. No different to when Biden admin did when he was in charge. No different to what Biden admin did when he was in charge. Tommy Tinkler, what was that about? I pointed out last time the job numbers weren't actually strong. It was all government hiring. Most folks behind the curve again. Thank you, Tommy Tinkler. Good morning, Sensei. Good morning, Tim Rogers. Thank you for being here this morning. No claps, America first, baby. Sensei, we need the Phoenix song for some good energy. Well, here we go. We're going to put the music on, smash the like button. We're going to get ready to go over to Martyn in about 2 minutes' time. So here we go.
The year is 1991. Birds and people are living together in seemingly perfect harmony until one day a young man catches fire. This is Phoenix.
You've been knocked down and got up again. In a corner, you're surrounded, no defenders.
Please do hit the like button. I'll give you my final thoughts on this all, how this affects the crypto markets, XRP, and then we'll go straight over to Martyn in 2 minutes' time. So let's hit the like button.
Like a phoenix, you burst in a fire, burn. A thirst and desire, you transform right up.
Oh my God, look at gold. Gold is up big right now. This is a major concern. This is what's going on in the background. People are buying gold. Recession fears are real. Look at this on gold. Suddenly up 1.5%. That's a massive move. This is the news. This is what's happening in the background. As soon as those jobs numbers came out, gold went up big. People are buying gold. When do they buy gold? When there's recession fears. So look at this.
Truth behind the veil, and you know that they're just looking for attention. Oh, you don't let the ruthlessness prevail. Oh, it's time to light your fires for ascension. Like a phoenix, you burst in.
Gold is up 1.3% in about less than 20 minutes. That in 20 minutes, within 20 minutes, gold is up 1.5%. Do you know how much money is needed to move gold up that much? It's a ridiculous amount. It's the highest market cap asset out there. This is the sort of move you expect on gold. 20%, 1.5% in 20 minutes. That's the sort of move you expect on gold if a war has just broken out. The dollar is crashing as well. Dollar is down as well. Obviously playing into the gold's move up, but dollar is crashing as well. Make sure you guys hit the like button, subscribe if you are new here as well. We've got breaking news after breaking news right now. Dollar is down big. That's you can obviously see it hand in hand with gold going up. Jobs data not looking brilliant. Tariffs are all over the place. Recession fears are coming out as well. And now we've got Martyn ready for his live stream. So what I'm going to do Martyn is ready to go. So what I'm going to do is send you straight over to Martyn. Thank you everyone for tuning in. We're live every single day, whether we're up, down, sideways. We'll be here as a family to try and navigate the markets. So thank you everyone. I told you to be careful. I knew this was coming. You can only fake things for so long. Vanessa, no one can know something's coming, but thank you for your opinions. Live next, there is Martyn's link. Okay, so there's a lot of stories in today's newsletter. Let me give you the link. Go and check out the newsletter. A lot of stories we didn't cover. If you are investing in the markets, you need to understand the underlying news. You need to understand the real news, not politically motivated news, just the news that matters. 5 things every day, deep dives, market snapshot charts every single day. That's a 1-week free trial. There's a free plan, there's a monthly plan, there's a yearly plan, but there's a free trial on that link as well if you want the full content. Go and check that out. What we're going to do now is go over to Martyn. What is the bull market over? 65% of you say no, but 34% of you say yes. Could the bull market be over? Yes. Do I think it's over? No. I think August might be a pretty bad month, but hopefully we get to the end of the year and then maybe a recession as well towards the end of the year, but we will see. We will see. We will navigate it together. Gold is selling off slightly, yes, but it's still up 1.4% on the day. So what I'm going to do is go over to Martyn. Martyn has been trading this behind the scenes. He's got information that no one is talking about. So let me give you the link to Martyn's show. Go straight over there. He's going live any second now. So thank you everyone for tuning in. Thank you so much for that super chat at the very end. Really do appreciate it. Your 10th super chat live on the stream. Thank you very much. Really do appreciate it. So, the stream will take you automatically there, or that link pinned above will take you there. Until next time, make sure you take care of yourselves and each other live every single morning at the same time. Until next time, see you. Bye-bye.